Hi everyone and welcome to the weekly Forex Outlook with myself, Kathleen Brooks, for the week beginning Sunday, May 26th, 2013. Well, we've just come off a very volatile week. We had some very violent moves across asset markets, in stocks, in bonds and in FX. Now we are, as we start a new week, we're thinking about, there's some new themes that are potentially in the market. Will the Fed end QE3 or taper purchases? Will global stock markets continue to be able to carry on with their gains if monetary policy isn't that loose? And just how strong is the global economy? Now, what we've seen is some signs that China is slowing down. Also, some rather mixed news out of the US. We couldn't say for sure that recovery is going to go gangbusters for the rest of this year, but it certainly is, pause for reflection. So potentially that sell in May could come into play just a little bit later than some of us thought. So let's take a look at dollar yen. That was one of the biggest movers in the FX sphere. We obviously saw that very large decline last week in the Nikkei, so the Japanese stock market. This came on the back of fears that QE3 in the US will end. Also a spike higher in Japanese bond yields. Now, yields tend to have a positive relationship with currencies, so when yields spiked higher, that also puts some upward pressure on the yen. But this is a daily chart. So as you can see, for those of you who kind of trade in the shorter to medium term, as you can see here, dollar yen is still in an uptrend. And in fact, we think it's still in an uptrend above, as long as it remains above that support line that I've marked out for you there, which comes in at 100. So we see going forward, because there's an awful lot of uncertainty out actually, key support is 100. Only if we get below there do we think that the overall trend will have changed. On the upside though, it does look like gains will be capped for now anyway at between 103.30 to 70. That was the high from last week. Now, obviously, when you see the dollar move, it did seem at one point like dollar gains seemed to be capped a little bit and they were moving lower with equities. Now, the bigger question for that is, what does that mean for commodities, for gold in particular? Now, what we saw last week was the dollar fall, but also safe havens rise like the yen and the Swiss franc. Now, obviously, gold is also considered a safe haven. So what did that do and where does that leave us for this week? Let's take a look here at the daily chart for gold. As you can see, gold didn't sell off like the rest of the commodity block. Instead, what gold actually did was really trade sideways, and we're now in a very defined short-term range between 1350 on the downside and 1400 on the upside, which is acting as solid resistance. Now, we still see a leg lower for gold, not least because we see kind of the inflation outlook for gold looking quite weak. Added to that, the end of QE in the US really, again, just negates the need to hold gold. But right now, the markets are being cautious. So for as long as they're cautious about the future steps of QE, then we think gold could potentially trade sideways. Very bullish development for gold would be if we did break above 1410 on the upside, then we could see a recovery towards that 1500 level. Likewise, if we were to break below the bottom of that range, below 1350, that really opens the way to 1325, the low from April, and then potentially 1280, which would be a multi-year low that we wouldn't have seen for more than 3 years. So overall, good luck trading this week. A lot to digest, some potential changes in theme, and a lot of volatility to deal with as well. But please do join us next week for more. Thank you.